Market players are adopting a cautious position, waiting and seeing what the outcome of the US presidential elections will be. This as these elections have been described as too close to call.
We have seen that there have been what we call a Trump trade, and after the poll showing that at least Harris is coming back, and it seems as if she's edging ahead of Donald Trump, we saw the unwinding of those trades, meaning we've seen the US dollar starting to weaken, because remember, people think that Trump's policies are inflationary in nature, and then that being the case, then it means the current interest rate cuts might not continue. So as a result, the US dollar might continue to firm up, but the opposite is expected to happen when Harris maybe has to win.
For now, markets are fairly stable, with even the major volatility index gauge seen as subdued, but that could change very suddenly and dramatically in the coming days.
Of interest is that if it could happen that there is a dispute or maybe there's a delay when it comes to the counting, then definitely we should expect a lot of volatility to continue.
When all is said and done, the outcomes of the US election could be quite consequential for economies like South Africa, being net importers of major commodities denominated in US dollars.
We know we've got our AGOA that still needs to be extended, but the biggest impact here is going to be the US dollar. And as a net importer, you want to see whether we are able not to import inflation into our economy, as we know that most of the things are priced in US dollars and the likes of oil, and we know that we're a net importer. So that itself, can have a very devastating or positive impact on our economy.
Meanwhile, the US dollar has been trading weaker than in previous weeks. This followed a weekend opinion poll which showed that Harris had taken a surprising lead in the state of Iowa, which has traditionally been viewed as a Republican stronghold. Nompumelelo Siziba, SABC News, Johannesburg.